And joining me now is Burgess from Nedbank Private Wealth to give us his take on the market's activity. Kyle, thanks so much for your time this afternoon. Now, things completely different from about 24 hours ago. While markets were choppy, many raised concerns about the US's involvement in the conflict and how Iran might respond to the hit to its nuclear facilities. Hours later, we are talking about a possible ceasefire. Will this happen? I mean, we saw oil prices ticking lower back at levels last seen before the tensions escalated last week.
Hi, Tarling. Thanks very much for having me. Yeah, look, things are certainly a lot more different now than they were 24 hours ago. But yeah, we've still got 4 and a bit hours left in the trading day, so I think anything can happen this afternoon. I think we've, already seen the ceasefire being broken by Iran. Hopefully this is just perhaps the last salvo. But yeah, it would be ideal if this sort of 12, 13-day period of aggression in the Middle East came to an end. Obviously, significant implications for the oil price and obviously a read through to inflation. So impacts us here locally and obviously globally. But again, this comes at a time when we've already seen heightened geopolitical tensions pretty much across the globe. We've still got conflict between the Ukraine and Russia. So there's still a lot going on, and I think this just adds to that sort of uncertainty that investors are feeling at the moment. And I mean, you are seeing that playing out in the volatility of the price of oil and, in fact, the price of gold over the last 12 months. So yeah, certainly an interesting time. But like I said, still a few hours left in the trading day.
Would you say that the volatility around geopolitical risk has already been priced in? I mean, think about what markets were doing yesterday, late last week, where trade seems to be very choppy.
Yeah, so I think it's a difficult one. I think if you look at the oil price specifically, you've obviously got supply and demand. Yeah, so we've seen the closure of the Strait of Hormuz, and as you mentioned in your a significant portion of the global energy market moves through that strait. Excuse me. So that impacts obviously your supply side, and then all the uncertainty. And what that means is that again, it's uncertainty from a global growth perspective, which would impact demand. So supply and demand being impacted on that front. And I think, but anytime you've got a very tradable commodity, you're going to see reactions to the upside and the downside, probably a bit overextended. And you're probably seeing that now and again. If you look at equity markets, pretty much across the globe, particularly in South Africa, we're pretty much at record highs. The S&P 500 and Nasdaq holding their own. So equity markets really seem to be shrugging off, a lot of this geopolitical uncertainty, and in fact, uncertainty around, where the US is at from a fiscal perspective. Okay, granted, you've got the bond market, which is, giving us sort of different signals, and is certainly causing a bit more, or seems to be a bit more anxious about what's happening in the US and globally than equity markets at the moment. But then if you look at the price of gold, I think a lot of investors just looking for some form of certainty and, getting involved in the gold price.
And sticking with the gold price, we have seen it pull back over the last few sessions. Year on year, it's still really high. But does this pullback provide some buying opportunity if you are looking to get into gold?
Yeah, I think it's a difficult question. Like I mentioned, you don't have really supply and demand dynamics that you're working with, so it's really a sort of a safe haven play.
Yeah.
And at the levels that we've seen gold at the moment, I'd suggest perhaps that we are probably in overbought territory, so looking fairly expensive, but it's not really a view that we hold specifically as a house, but it does give you some insurance against the volatility that you're seeing. So if you're looking for that, it would provide you some sort of a buying opportunity. But again, I would think that going forward, you'd hope that some of these geopolitical issues would simmer down, and the gold would be less in demand. So probably depends on your view, whether it's long term or short term. But certainly, if you're looking for that sort of protection in markets, perhaps that's something to look at.
All right, let's get into some company news. Capital Appreciation delivering a double-digit growth in its top and bottom line, citing an upbeat showing from its payments division. I know it's a small cap counter, so I'm not sure if you look at it.
Yeah, so we don't look at Capital Appreciation, but I think it is an interesting business. It's a fintech business that, as you mentioned, operates in payments, and in fact, the payments division doing particularly well. So again, as South African investors, I think market cap of about 2.5 billion. It's a bit small for us, certainly for our client base to look at currently. But again, this is a business that's shown really strong headline earnings growth over the last 3 years. Revenue growth slightly softer. I think you're looking at over the last 12 months, about 7.5% revenue growth. So perhaps justifying that single-digit multiple that they are trading at, but they're certainly not expensive by any means. And I think an interesting business to look at if you are looking in the small or mid-cap space in SA for something that's potentially undervalued from a pricing perspective. But a fairly strong set of numbers, and in an environment, I think they operate in a segment in terms of payments, which is very attractive at the moment in an attractive region like SA relative to other African countries.
All right, and just quickly before I get into the stock picks segment, Naspers processed out with results yesterday, and overnight we heard some commentary coming out from CEO Fabrizio Bloisi saying that the group is willing to let go of its stake in the Chinese delivery giant Meituan as the group explores entering the Latin American market, a market Prosus is already dominant in. What's your reading of that? I mean, there's been a lot of talk about how Prosus is trying to divest from China and look into other markets like Europe and Latin America as well as India.
I think from a Prosus Naspers perspective, you probably spoiled for choice if you have two businesses like Meituan and iFoods, and which is the dominant player in the food delivery space in Latin or South America at the moment. So they certainly would have to choose one. And I think comments coming out of their CEO saying who's better positioned for global growth going forward and better positioned in their ecosystem. And their comments would suggest that iFoods is better positioned for that. And that would perhaps necessitate the sale of their Meituan holding. I think it's currently at about 4%, so about $4 billion, which would be quite a significant cash sort of injection for them. But I think from a business perspective, not ideal when you've got two big players in one industry, going head to head. You'd obviously want to back one, and I think Meituan's been exceptionally successful in Asia, but iFoods are dominant in a very attractive region like South America. So certainly positive and spoiled for choice if you are sort of contemplating those types of decisions in your business. Certainly a good thing, I would think.
All right, let's hit pause on the conversation and take a moment to touch on what your industry peers are finding interesting.
Altron stood out, and I hadn't actually looked at the share for a few weeks. After they released results a few weeks ago, the share price really popped. They delivered excellent results, showing very strong growth in Netstar, the fintech business and the health tech business. And I don't understand why the share price has been under this much pressure since. It's now trading at around the 20 Rand mark. I see directors were still buying at 24 Rand. The share is trading on a forward PE below 10 times, forward dividend yield that looks really attractive as well. Their cash generation is very strong. The dividend is very high, and it's growing. The prospect for growth in all their businesses are very exciting. And I mean, I would implore on investors that are interested in Altron to actually go and look at the last results presentation, where they give a detailed view of the strategy of that business and how future focused they are. So Altron.
An offshore listed company, Paris, also now New York Stock Exchange in the US. So I think just for the current environment, we've seen the oil price kick up. There is lots of geopolitical unrest, and this is just one of these companies that I think could be a very, very nice hedge against things escalating any further. And it's not an expensive company. I mean, as we sit here, even after the recent movement, it's still trading at just over 10 times price earnings ratio, 6% dividend yield. So it's a company that's singing the right songs. I mean, they're talking about 50% of the capital expenditure is going to be towards low carbon energy by 2030, and they want to try and achieve net zero emissions by 2050. So looking good. Definitely total this week.
So Total Energies and Altron, your analysis on those counters?
Tarling, as it happens, it's both of those are businesses that we don't necessarily look at for our clients. But Altron is something that we've held for clients in the past. We don't currently hold it in client portfolios. I think Chantal makes a pretty compelling argument to have a look at their results. I think anytime you've got a fairly exciting business trading below around 10 times earnings, it's worth having a look at. But like I said, it's not something that we necessarily look at for our clients. And then Total Energies, I think that's again, quite an interesting play at the moment, just given the volatility that you are seeing in energy markets. And I think, again, they're, specifically in the commodity space, and Total, I think if you look at their, price earnings ratio, I think that perhaps is a little bit misleading. But strong cash generation, nice dividend yield, and certainly something worth having a look at in times like this.
All right. So what are you confident about? What's your stock pick?
My stock pick is a local retail, so the Foschini Group. I think, if you have a look at this year in general, we've seen most of the apparel retailers, so Mr. Price, Truworths, and Foschini coming under quite a bit of pressure. I mean, to give you an idea, the Foschini Group was trading at 170 Rand at the beginning of the year. It's currently trading at about 125 Rand. We feel that management's capital allocation decisions over the last 18 months have been fairly sound. They've really opted to optimize their current stores, pulled back a little bit on new store openings. They've made an acquisition in the UK, which seems to be doing very well. They're quite well positioned in Australia, so 2 developed markets, and then their South African and African exposure. We feel that they're very well diversified across the retail and apparel space, where they do operate with really compelling brands. So, and again, you're buying this business for 12, 13 times earnings. We feel that that's a compelling investment case, and it's something that we'd certainly be looking to add to client portfolios going forward.
All right, so TFG, one to have on your radar. Carl, thanks so much for your time and sharing your insights of trade at midday. That was Carl Burgess from Nedbank Private Wealth.